I've spent the last 24 hours trying to get my head around why so many people lost so much money on just a handful of high-profile stocks. And I keep coming back to the idea that this is a force majeure situation, more or less an act of God that hardly anybody could see coming. But we need to survey the damage tonight on our last show of an amazingly bad stock market year. Even as today was pretty decent, Dow gaining 176 points. How about that, huh? S&P rising 0.59%, NASDAQ inching 0.21%. Maybe Santa is visiting. First, let's define the list of stocks I'm talking about. There were plenty of big cap stocks that got killed this year. So we'll limit the discussion to companies that were valued at more than $750 billion at some point in the last 18 months. Get a load of these peak to trough situations, okay? Tesla, let's start with that. It has fallen 70% from its peak, losing $846 billion in market capitalization. And then there's Meta Platforms, formerly, Facebook. It tumbled more than 69%, losing $770 billion. NVIDIA has shed 56%, or $425 billion. Amazon, some 55% from its peak, or almost $1 trillion. Alphabet dropped 41%, $798 billion. Microsoft is down 32%, which is $772 billion. And Apple has dropped 28%, a lot of money, $851 billion, but better than the others. That is a total. This right here is a total of $5.4 trillion in lost value, okay? $5.4 trillion. Just an incredible amount of lost money, the likes of which actually I've never seen before. And chances are pretty good you lost money in at least one of these stocks. We certainly had some round trips here for the Charitable Trust, but in retrospect, we were lucky to unload many of these at much higher levels. Why? Because we have rules. They simply became too big a portion of our fund. And discipline says you must trim when that happens. So we followed our discipline. These are the stocks where the most damage was done this year, and I wouldn't be surprised if they're still going to cause problems for next year, unless they get their act together, because there are fundamental problems here. Now, if you're like my Charitable Trust, you've held many of these for a long time. In that case, technically, you might not have losses, but you certainly missed a chance to sell your entire position at much higher levels like we did. Your gains are much smaller than they could have been. That's why I always tell you to buy and do homework, not buy and hold, like the Graybeards say. Why? Because buy and hold totally failed you here, with the possible exception of Apple, which fell a lot less than the others. And by the way, I think of all these has a much better chance of revisiting its old highs, even as I expected Apple at the beginning of the year.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.